Hi everyone. I've been getting a couple of requests from folks to do a similar walkthrough like I did for the overview sheet, just to sort of talk through how you would use the company spreadsheet. And so we're going to go ahead and do that today. I've got a couple items that I want to talk through. So we'll start out. My first item was, okay, so let's go ahead and do a similar poll like we would do that we did for the overview sheet, just to sort of talk through how you might do that. So at a high level, this is structured really similarly. We're once again on the company spreadsheet. So we have in this case as well a two pull sheet that will where you want to list out all the tickers you want to pull information for. We'll stick with this, I guess, as is and just pull that. Before we actually run the script though, one thing I did want to call out that someone flagged was that I think when I uploaded some of my scripts, some of these lines might have been commented. So one thing I do want to flag is that if you are pulling information for a ticker for the very first time and you know that data is not in the spreadsheet already, you'll want to make sure that all of these lines for both single sources and bulk sources, so all the lines between 52 and 67 are all uncommented out. So this is like for the tech unsavvy folks. If it's commented out, it basically has a pound in the front. So you want to make sure all these are uncommented out, so make sure we actually go and call these endpoints and actually collect all that data. The reason why some of those have been commented out in the past is because sometimes if I'm just iterating really fast, I don't want to actually pull it for everything, and I'm only trying to focus on a couple. But in this case, I want to pull everything for the first time, so we'll go ahead and leave all that uncommented out. And then, like last time, right, we'll just run the same command, but this time focusing on the company data sheet. So we're going to go ahead and let that run in the background. And as that gets pulled in, we'll go ahead and just talk through some of these other items. So another thing someone asked me was just at a high level how you think about using both spreadsheets, right? When do you use the overview sheet versus how do you, when do you sort of use the company sheet? So at a high level, I think this is kind of self-explanatory, but I basically use the overview sheet to give me a really high-level holistic perspective, right, on a certain like category, on a certain number of companies. So of course there is the general like market overview. So on a particular given day, how are things moving, right, across all these different sectors in the industry. And then on top of that, this view is mostly meant to give me a really quick snapshot view and side-by-side view of a number of different tickers all at once. So I guess you could use this in a couple of different ways. Like one, you could use this to track all of the companies in your portfolio, right? Like maybe you want to continue to monitor those. Or alternatively, you could also use this, like I think one really good use case is if you're trying to look and think about a industry more specifically, right? And you want to get a sense of how all these different companies stack up against each other. So what you could do is, I can probably do a separate video for this just to talk about how you'd kind of think about looking into industries and figuring out what tickers you want to look at. But basically, you try to pull a list of tickers out, put this here, and then, get a snapshot view of everything across the board. So as there's like a common, I guess metrics wise, there's a combination of more sort of like in the moment, like momentum-y type of metrics, right? So how is it sort of trending relative to before and stuff like that. And then you've got more of the like the fundamentals, right? So what are the actual levels of revenue, net income, blah, 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 blah. One thing I'll flag is that one thing I've added, I forget if I flagged this and talked about this in my last video, but I recently added these columns up at top to provide percentile views of each particular column. So that can be really handy if, for example, you're trying to look at a particular number and you want to get a sense of, like for example, in this case, I'm looking at the net income for Microsoft, it's $44 billion. And, without, like, if I didn't have this, it would be hard to get a sense of, like, is that good? Is that bad? But having this helps you get a sense of where this particular company falls for this metric against all of its peers. So in this case, you would look at, this information up top and you would see that, okay, it looks like for net income, they are doing pretty well and they're well above the 75th percentile there. So also super handy, especially if you're looking at multipliers, right? Because you obviously are trying to see how all these companies stack up against each other. So yeah, that's sort of how I think about this at a high level. And then the way I think about this, right, is that, okay, maybe I'm looking at a set of tickers for a particular industry, but maybe I want to double click on some of these. Maybe I want to double click on Microsoft and get a sense of, okay, this is what it looks like right now, but what is that? How is that sort of trended over time? And that's where we would jump to the company spreadsheet to help give us that view. So at a very high level, I think that covered this item. And then, we'll just sort of talk through some of the key aspects of these sheets. So, as you'll see, some of the information will be coming in as we kind of go through this because it's being uploaded right now. But at a high level, the way you think about this company spreadsheet is that it allows you to get more of is it longitudinal or latitudinal? It allows you to look at a particular company really in depth, right? So from this particular sheet, the annual sheet, this basically gives you year over year performance and numbers for the past 20 years for a particular given company, right? So all these numbers are fiscal year numbers. And structure-wise, this is structured pretty similarly to what Warren Kitty had in his, right? You've got company sort of like just data, like market cap stuff. On the top here, this area here, I actually have not built out yet, so that's on me. And then this bottom section is more about, insider trading. How many have you seen? For a lot of the stocks I think I've pulled right now, a lot of them don't actually have very much insider trading, so you're not going to see very much here, but that's where that would go. You've got the current state of the multipliers, and you've got like helpful links on the side. And so looking at the actual meat of the spreadsheet itself, the way it's roughly structured is that it's structured basically by all the different major financial statements that you see. So income, which gives you like high level revenue, earnings numbers. You've got the balance sheet, which gives you information about assets, liabilities, working capital, stuff like that. You've got cash flow, which tells you, okay, what does, given my net income, what does all my levels of cash flow look like? You've got ratios, and then multipliers at the very bottom. And so at a high level, I guess I think both. So this, I will admit that these are the metrics I've decided to focus on and keep track of. Of course, you're welcome to customize this and figure out what you want to add on. If you want to customize these for your own views, I might actually do a future video on how you might do it, how you actually would do it. I'm definitely gonna probably do it for the overview spreadsheet because I know I did want to add these two columns, which could be straightforward, but might require some changes to the script. We'll have to see. But at a high level, these are just the ones that I've been tracking. And you can continue to evolve these if you'd like for yours. So at a very high level, what I'm tracking is revenue, also known, I guess, and also referred to as sales. So it's basically top line number, right? What is all the money that your company has earned that particular year? I track the growth over time. So this is basically my shorthand. Percentage usually just means growth. So I track revenue over the percentage growth over time. You generally, of course, want to see that accelerating over time. And I also track the general trend across 3 years. The conditional formatting I guess I have in this place is Warren Buffett's criteria. So some of this I might be tweaking, but I guess if it's over 15% for the last 3 years, I generally highlight that as green. And then I've got net income. So I guess just as a really quick overview for those that are not as familiar with sort of accounting principles and stuff like that. So this is generally how you break down an income statement. So most of these you can actually get each specific line item from the API that at least I'm using. But of course, given that I don't want this to be super long, I'm only focusing on these as my major metrics. But at a high level, the way you think about it is, so sales is basically AKA revenue. That's your top line number. You'll usually subtract out COGS, which is the cost of goods sold, which will give you your gross margin or gross profit number. And then from there, you'll typically subtract out, all your different operating expenses. So any money that you spend on selling or marketing your product, any R&D expenses, general and administrative expenses, is depreciation amortization included? I forget, but you have your set of operating expenses. You'll typically, once you subtract that out, then that's where you get operating income. That's an interim level you could track. I personally don't on my spreadsheet. And then typically after that, you've got another category of expenses around things like interest, things like income taxes. I always thought depreciation and amortization actually was after operating income, but I actually am not quite sure. Anyway, once you subtract out all those different categories of expenses, you end up with net income at the very bottom. This is also referred to as like net earnings sometimes. So when people say things like earnings per share, you're actually using net income and dividing that out by the number of shares. So that's another thing just to flag, because a lot of these terms sometimes get used interchangeably. So yeah, to recap, I have a quick guide here just to remind myself of that, what is sort of considered or not considered in this particular metric. So net income is a number a lot of people focus on because that basically tells you how profitable a firm is, right? So if a company, for example, I think is Square, I forget, for a bunch of these companies, yeah, if you have negative net income, that means your company is not profitable. So it looks like Square, it was not profitable, and then recently it has been over the past couple of years, which is a good sign. So yeah, continue to look at this. Okay, so that's net income. You also want to track what does that look like over time. So in general, I think I highlight any of these as red if any of these are negative. Next, you've got earnings per share, which is basically what is net income divided by your share count. So that's what that looks like. I also track that growth of that over time, and then also 3-year and 5-year trends. I think this is a metric that a lot of people focus on, and so I actually have this like really quick like check on the side to give me a really quick understanding of how the earnings per share growth numbers have been trending over time. So these will go red or green depending on whether this company satisfies the conditions. So this basically tracks like so TTM means trailing 12 months, right? So what is the last 12 months of data for this particular company? So does the trailing 12 months EPS growth, is that more than the last year? And then I compare with the last year to the last 4 years. And then I track also the last 3 years relative to the last 5 years. And in all these cases, you always want everything to be trending upward, right? So so I think the number will actually, if it is, so depending on whether it satisfies the conditions or not, it'll turn red or green, and the condition will actually also update and clarify. So yeah, so it looks like, Microsoft, everything is looking pretty good. Like, net income, like some stuff has like wavered over the past couple of years, but in general, seems like things are trending in the right direction. So that looks good. The next set of metrics are looking at margins. So so these are all percentages. It's basically looking at how profitable basically is your firm, right? So you've got different levels of profitability. You've got gross margin, which if you go back to here, it's basically just looking at what is this number divided out relative to all of my revenue. And so you have gross margins, which basically, and all of these different margins will tell you different things, right? So a firm that has like really high gross margins, right? It probably means that their cost of goods sold is actually quite low. Relative to another company or another industry where maybe that's really different. And this is where thinking and analyzing industries is really helpful, because you start to develop a baseline for like what is a normal number for a certain industry. Because like, for example, the cost of goods sold for like, an apparel company, right, where you're actually like making clothes, is going to be very different from like cost of goods sold for say like a tech company where you like everything is digital, right? It's all software. So it's not going to be very high. So in general, this is where you want to look at industry data just to be able to compare this particular company to how, other people in the similar industry are doing. So anyway, that's gross margin. You've also got operating margin. So it's basically the similar thing, like what is operating income over revenue? And then you've got net margin, which basically tells you, I think at the very end of the day, like how profitable is your business. So net margin is something in particular I like to look at a lot, because that basically, it's kind of like at the bottom, at the end of the day, right? Like how do you sort of stand? And so I believe in general, like these are actually pretty good margins, relatively speaking. Actually, so this is where, if you look at the percentile data, industry stats data, you can kind of get a good sense. And so like, for example, like just as an offside, one way you can use this is like, okay, I'm looking at Microsoft. I see that your net margin is like, oh, it's 33%, and your gross margin is like almost 70%. So like, is that a good or bad thing? Who knows? you can actually look at, so there's a couple of different ways you can compare this. One of the ways that I'll flag right now is that you can go to this industry stats tab, and this basically gives you, right, across all of these different industries, I believe there's like 100 or 200 of them. What are the like from the last year, what do the general numbers look like? So from what we remember, right, Microsoft was 33%. Yeah, 33% net margin. So if you look at this, right, this gives you all the net margin. This gives you the distribution for the net margins for all industries across the board. 33% is actually pretty good, right? Like 90th percentile is like 16%. So 33 is like you're doing pretty well, right? So you can actually like sort also this. So you can get a sense of like, okay, what industries have the highest net margin, right? So like, okay, software, like, okay, duh, that makes sense. Like that's pretty high. Surprisingly, railroads also really high. That's kind of surprising, but I guess there's not that many firms. And you can also compare a similar thing for gross margin, right? So gross margin, they were around 70%. So yeah, similarly, like also doing really well. So that's like one way that you can kind of, use some of these different sets of information together to like get a sense of what's going on. So that's enough about margins. Next, we've got EBITDA. So that's yet another sort of measure. Basically, so EBITDA is kind of like this long acronym. Basically, it stands for earnings before interest, taxes, depreciation, and amortization. So it's just yet another view for the general revenue for a particular company. I believe from what I've read, I think people mention that like you use EBITDA sometimes to be able to compare companies against each other on a more consistent basis, because it takes out, because I believe net income, it takes out interest, right? So you subtract out interest. And for some companies that maybe are like really highly levered and they have a lot of debt and they're paying a lot of interest, some of the numbers will be really skewed if you look at net income. And so I believe people say that you look at EBITDA sometimes to compare across companies in order to look at numbers on a more consistent basis. So like, trying to remove some of those variables that might skew your numbers. So, okay, that said, that was the income statement. I'm gonna take a drink of water really quick. Okay, so that's income statement and like revenues. Next, we've got balance sheets. So the balance sheet is basically where you look at what are your assets and like how are they sort of broken down? What are your so this is actually where this comes in handy. This sheet is what I use to give me a sense of, so this, for the API that I use, they've got a couple of different endpoints, and I've actually created this sheet to just help me track like what information is available from each endpoint. So we talked about income, right? Here are all the different like data, different line items you could grab. So you could actually, if you wanted, right, look at all these specific administrative line items like on their own. And similarly for balance sheet, it's basically like what are your assets, what are your liabilities, broken down to like very specific categories, right? So you've got like current assets, you've got like long-term investments, you've got like for debt, you've got long-term, short-term, and so you've got all these different potential iterations and line items. So the ones I focus on are basically assets. So what are your total sum of like all the things that you own, what is your total debt, and what does that look like? Total liabilities, which is surprisingly something I had to look up. It's not the same thing as total debt. So I believe total debt, it's like, it's like all the debt you have given out to external people that you have to pay back. Liabilities, it's like that plus other stuff. So I think like one key example, it's like salaries you have to pay, right? So it's something that you have to pay out, but it's not debt. So anyway, that's total liabilities. And then you've got equity, which is basically assets minus liabilities, is whatever remaining is basically your equity. And so in general, you want to see that trending up over time. That's like, I think according to a Phil Town video that I read, that is like a really key metric you want to look at. So that's why I track the percentage growth over time, because you generally want to see that going in the right direction. And from there, another thing I track is, so another category and criteria that it seems like a lot of people look at is debt ratios, because you want to make sure that the company that you're looking at has, is not overloaded with debt. And so there's a couple different debt ratios that you can use. Like if you look here, I don't know if it's gonna be on this one or another one. I believe, yeah, so you can get like the debt ratio, which I believe is debt over assets. And then you've got debt equity ratio, which is debt over equity. So it depends on whichever one you want to look at. So basically you probably want to have some kind of debt measure in there just to get a sense of like, okay, is this, because I guess the reason why you want to focus on it is because having too much debt is a bad thing for a company, right? If you have to keep paying a certain amount of of bond payments, right? If you have to keep paying back all this money and all these all this interest back, that is additional load that company has to maintain and keep up, or else, potentially risk like going bankrupt and becoming insolvent. So that's why you want to make sure that's not in a bad place. So current ratio, I forget, is, okay, yeah, so it's assets over liabilities. In general, this is, I think 2x is something I found from a Phil Town video. Basically, I believe he said, if you're over 2, that's good, right? Because that basically means you've got a lot of assets relative to the number of liabilities you have. So in general, you want to be over 2. I think he said you can be like somewhere between 1 and 2 if you're like a well-run company. But I think he said in general, if it's below 1, that's where it starts. Yeah, it starts getting a little sketchy, right? Because that means that your liabilities start to outnumber the amount of assets you have, which is potentially dangerous. So in general, I think that's the general criteria I use. If it's green, if it's above 2, and it's red if it's below 1. So that is the current ratio, and that is basically the balance sheet. Next, we've got cash flow. And so this basically, if you think about cash flow, it's kind of similar to like income, where you've got like a top line item. So the top line item starts with net income, right? Which is all the money that you have after you pay out all these major expenses. And basically you start subtracting stuff out to get all the different levels of cash flow underneath. So I have net income here, reiterate again, just so I have a sense of where it starts from. And to reiterate, so operating income, it's basically net income. You add back a couple of different sets of expenses. So you add back depreciation, amortization, stock-based comp, and you subtract out changes in working capital. So I remember one thing when I was researching this a couple weeks back, I think there is, in general, I think people are saying that in general, your operating income should be above net income because you're adding back all these expenses, right? But there's basically the thing you want to watch out for is like if you've got weird relationships between your net income and your operating cash flow. Because if I forget the specific example off the top of my head, but there was some article I was reading that were saying how sometimes, if you see that, I believe it's if operating income is really far below net income for a really long time, that could be a sign that something weird is happening, right? Because, I think the reason why you want to look into this is because people can do weird things to juice up their earnings numbers, right? Because people know that, people pay a lot of attention to net income. And so, for example, I think the case that I was reading about was one shady case that happened where someone had booked a lot of revenue, right? So it said that they sold a bunch of stuff to this company, but it turns out that I think it was Avon or something, but it was that brand that had sold all this stuff, actually was selling it to a retailer, but had left open these very generous return policies. And so a lot of that I think was sitting somewhere in the middle as working capital. And so basically that's kind of why you want to compare these things, because companies sometimes might do shady things to juice up some of these numbers, and you want to make sure that at the end of the day this you sort of see where the rubber meets the road and you get a sense of that. And that's why this changes in working capital thing is kind of important, because it gives you a sense of I've sold that I sold and made that revenue, but have I actually, so to rewind and clarify how that part works. I guess one thing that you have to think about also is that even after you've made revenue, sold something, you actually have to collect the money from someone, right? And that's a whole, for businesses, that's a whole separate process. So that's where on your balance sheet, if you go back to here, that's why people look at things accounts payable and accounts receivable, because that's basically where things are kind of in this interim phase where, I've either bought something and I need to pay it out, which is account payables, and you've also got account receivables. I can't find it. Oh, it's right here. Account receivables, which is basically I've sold something, I now need to collect that money. And so because some stuff can kind of live in this no man's land, that's why you kind of, when you're looking at when you're looking at, your changes in working capital, it basically factors all that into this ultimate number. So anyway, along the side, but that's sort of something you want to look at. And in general, of course, you want to see that trending up over time. Outside of that, the next other major line items are, so CapEx. CapEx is basically, capital expenditures. It's like when you're basically investing money back into your company to, like, if you're, for example, like a semiconductor company, it's like, oh, I'm going to invest all this money into like building out more factories and more fabs so that I can continue to like produce these these like chips, right? Another example are like these cloud companies, right? So these cloud companies like Amazon with AWS, Microsoft with Azure and stuff like that, they need to spend all this CapEx to like build out these data centers, right? That can actually power the cloud services that they provide. So yeah, CapEx could be a really big line item if it's like, a company that deals a lot with like physical things. So that's CapEx. In general, it will be a negative number because it's an expense, right? So it's going to be subtracted off of your cash flow sheet. And then here are a couple of just like other, these actually I don't think I use personally as much, but in general, you've got, this is just tracking different like financial things that you could be doing with your company. So either you're paying out dividends to people. So a negative number, I think as I flagged, a negative number is basically you're paying out dividends to people. So like in the case of like, Chevron or whatever, all this oil and gas companies or something like that, that's money being paid out to shareholders. I also track like what's happening with the stock. So are they repurchasing stock? That is in general, I think, seen as a good thing. I guess it really depends. In general, for the most part, seen as a good thing, although there's a caveat that like, of course, you only want to do it when you think the price is not overpriced because you want to make sure you're getting it at a good level. So negative means that it's a stock buyback because you're spending money to buy back those shares and reduce your share count. Stock issuance is the reverse. So that's basically I'm issuing more stock, which is why it's positive on my cash flow sheet because I'm getting that money in return. Next, we've got debt repayback. So it's repayment. So it's basically once again, these will be negative because that means that it's a sign of like, okay, we're paying back debt. So we're reducing the cash, our cash flow so that we can pay back that debt. And then current cash, which is basically at the very end of the day, right? Like what is the cash, how much cash does this particular company hold? And so in general, I think the way you'd want to use this metric is looking at it in conjunction with everything else, right? So I think, for example, some things that people might look at and see, it's like, oh, like, for example, I think one case that you generally don't want to see is, oh, a company doesn't actually, like, for example, like a company that is well known to be a really like a dividend aristocrat or something. So they're known to kind of have this consistent dividend paid out. In some cases, I think some people have seen, like, for some distressed companies that are in those situations, sometimes they'll actually acquire more debt. So you might see like this total debt number go up in order to pay out that dividend instead of taking it from like the cash that they have. And that's generally not a good sign, right? Because you don't want to be, that means that you're in a bad situation and you're like almost making it worse by putting yourself into more debt in order to pay that out. So that's like, for example, one thing you might want to look at to see if like, okay, this company has enough cash to kind of keep going. So free cash flow is at sort of what you have at the very end of the line. It's basically what is operating cash flow subtracted out by CapEx. So that is also a number you want to pay pretty close attention to. I think the way I've heard it translated that is that this metric basically means what is, at the end of the day, if you were to like take over this company, right? Like how much cash would you have at the very end? And so yeah, that's something that you want to continue to sort of monitor. So also tracking growth rate of that over time. So yeah, that's cash flow in a nutshell. And then ratios, there's a whole bunch of ratios you could track. These are the ones I look at specifically. So ROIC, which is basically return on invested capital. This is a super important number because this basically tells you, right? So given how much capital, right, I'm like sinking into this business, given how much money I'm like putting into the business, how much money do I actually get out how much money do I actually get from that, right? And so in general, you want that number to be as high as possible because that means that this particular firm is more efficient with the way it spends its money. So If you were to compare like Microsoft with a ROIC of 8, which does not seem super great. If you compare to, let's say, Facebook, ROIC of 9. Okay, so in this case, I think this might be also worsened because of last year. Okay, 23. Anyway, that's sort of where you can start to look at, compare between different companies or even different industries, right? To get a sense of how capitally efficient is each particular firm. And in general, you want firms with really high ones because it means that they can spend your money more wisely. And then on top of that, return on equity. So it's kind of a similar number, but you're only looking at that equity number. I also track that in general, like across the last 5 years to see what that looks like. In general, you want all of these numbers, these are return numbers, to generally be as high as possible, and the higher is the better. And then we've got multipliers on the bottom. So this basically tries to normalize out some of these numbers because, of course, like, different companies might have different amounts of revenue, and it's sometimes can be hard to compare, especially when they're very different sizes. But these multipliers basically try to help you normalize out, right? Like, given for each like dollar in sales, for each dollar in earnings that I'm getting, like, what is the premium I am paying for this stock? And so, like, for example, you could look at, Facebook, which has a PE ratio of 26 and a PS, so price to sales ratio of 9. You can compare that to, like, say, I don't know, Amazon or something, which has, a price to sales ratio of 4, but a PE ratio of 74. And so that's where you can look at and use this to compare across different companies, just to get a sense of how relatively expensive they are or not. So anyway, that's like PS, that's PE. You can also do the same thing for your cash flow numbers. So this is price over your operating cash flow and then price over your free cash flow, just to see what those premiums look like as well. So yeah, that was a lot of words. That is the annual sheet. It looks like our thing updated. So yeah, I guess as we see all the information is trickling in. And then lastly, so we'll just go over the quarter sheet. In general, all these things mostly stay the same. I'll just call it some of the key differences. So this basically tracks what the last 8 periods are. One thing that I'll call out is that sometimes not all companies might have different fiscal years, and so some of them might end and start at different times. So in some, I guess, like, for example, some companies, like Amazon, for example, is a pretty standard. So their quarters sort of align to like the regular like calendar year. But I know Apple has a bit of a weird fiscal year that's like slightly offset. And so some of these might be slightly off. So in this case, you'll see that, okay, it is, so they're slightly skewed. That's just an FYI. But anyway, it covers your last set of metrics for the last 8 periods we have data for. All the stats for the most part are pretty much the same. I do break out specific like cost line items because that is kind of interesting. Like in some cases, like for example, maybe like you might have some companies that for example, like I know actually Snow would be a bad example to look at. Snow, I think, is all kinds of messed up right now. I don't know. So Snow has only been public for like 1 quarter or something, but for some reason I've got all this historical data. I don't know why. Anyway, it's not super great sometimes with like historical numbers, but in some cases, I guess I'm flagging this just to say that for some of these numbers, right, like in some cases you might want to kind of zoom in and see like how some of these are tracking over time. For example, like with SaaS companies, one typical pattern is that they are very high in like sales and marketing at the very beginning because you're trying to kind of start this flywheel, right, and get users. So you're spending a lot in sales and marketing. And the general idea is that like over time you get to scale and that like you start to become profitable. Your early cohorts have to pay for your later cohorts, and like hopefully this trends down over time. Anyway, one particular example of like why you might want to look at some of these specific line items. Another thing I'll call out that I've kind of forgotten about is this spreadsheet sometimes does not accommodate, like when you're looking at some of the growth numbers, sometimes they don't accommodate negative numbers really well. Especially like if you go from like a negative number to a positive number. Do I have good examples of that here? And I'm not seeing one, at least off the top of my head. That is just something to be aware of. That's something I've noticed. I forget for which company, but sometimes the way it's highlighted might be a bit strange. Anyway, that is so everything else I think basically is the same as, it was before. The last area that I will call out is this thing I've added on the side, which is, so I mentioned before, we've got this spreadsheet called Industry Stats that helps us track across every single industry, right? Like, what do some of these high level numbers look like? And just to give you a baseline of across industries, right, for some of these metrics. Another thing that is helpful, though, is to get a sense of what does, given a particular industry, right? So say I'm looking at software. For that particular industry, what does the percentile look like? So I get a sense of, okay, for Facebook, right? Like, here are its numbers, but how is it doing against its peers, which is what I really want to know. And so I've got a separate sheet actually for that. So this doesn't work because this only gives me, I believe, the median in a lot of cases for this number. I don't actually get the percentile information for a specific industry. So I actually create another spreadsheet it's called percentiles. So I created another spreadsheet that gives me for each industry, right, given a particular like metric, say like revenue or something like that, what is the percentile different, or what does the distribution look like for that given metric? So in this case, I pull all 5. So I pull 10th, 25th, the median, which is 50, 75, and 90. I only show 3 in this case because I didn't want to get too much. But this is super cool. This is basically where you can say, given the particular industry that I'm in, what does that distribution look like? So like, for example, I can look at like net margin and see, okay, here is, what net margin looks like for all the other entertainment software companies in general. You can see, okay, Facebook's doing really well relative to those. And like, for example, I can also look at ROIC and see, okay, like 9%, it's like, that's where some of the highlighting comes into play. I believe for a lot of these cases, it's green if it's above 75 and it's yellow if it's above 50. And so that's basically where you can kind of use some of these stats to help you interpret some of these numbers. The way that it works is that in general, so like, for example, if I switch to a new one, right? So it's loading. This is, I guess, I could probably clean this up a little bit more, but basically the way it works is that this actually gives you what the industry is. And then because I like set this up at first, you have to so the numbers here populate based off what this value is. So I would just want to make sure that it matches. So you could update it just to like pull it exactly. The reason why I guess I didn't like make this even more efficient is because sometimes I think that you could get some companies that don't have a category to them. I think these all might, but sometimes they might not have a category, in which case like I didn't want it to break. So in that case, anyway, side thing, like if you want to use it, you just want to make sure these two match. And if you like, I guess while we're talking about that, if you want to get a sense of like what companies are actually included in this calculation, it's all stored in this US by industry sheet. So if you, so it's sorted already. So these are basically all of the companies I'm using to calculate what that number is for like each specific category group. So that is the quarter sheet. We've already talked about the insider sheet. This is where you need to convert it for that. Industry stats tab, we talked about this. Just to talk about the general categories really quick. Actually, maybe I'll go through this in the industry overview video, but there's a bunch of categories if you want to scroll through and see. This is not super relevant for right now. I think that actually covers most of the general highlights. So we did the walkthrough and we did the key financial metrics. So that was kind of a long video. I hope that was helpful. And I guess let me know if there's anything else. I'll probably be doing a follow-up video to talk through how you look at different industries and just like get that really high overview. I will probably do a video just to sort of show how I'll update this particular new set of metrics. And I can also, I'm not sure if I'll do this, but I was thinking of, if people are interested, do a really quick overview of how these are structured so you can get a sense of like what I'm actually doing when I'm running through this, in case you need to make updates yourself to this in the future. So hope that was helpful, and I'll catch y'all later. Bye.